Hello, agents. Hello, everyone. So here's my top picks for the month of November. This is the Annuity Hot List, and we're going to walk through it really quick for you. And these are my top picks. I picked these are the cleanest products. These are all walkaway products, no recurring surrender charges, good companies, and some special things you might want to look at if you're deciding to shop that MYGA Annuity, a guaranteed accumulation product. So let's jump right into this. With the 3-year is now at 4.8% for 3 years. That one has a low minimum entry of $10,000. Not available in New York, and the issue age is to age 90, but in California and Florida, it's 75. And that's related to the death benefit. See, in this product says if the client was to pass away during the first term, that 3-year term, there'd be a surrender charge if you took a lump sum value out. But if the beneficiary just finishes the term, that goes away and you get the full deal. There's no charges on, no surrender on that. So no withdrawals on this except for RMD. That's another way they keep the rate up. The 5-year is the same at 510. Same exact idea, same requirements and limitations on that. You have to, continue the contract. Also not available in New York with the limited issue ages on that. If you do need withdrawals, it's $450 on the 3-year and $5 on the 5, and you can have the withdrawals and the full death benefit right away. So it's a cost of insurance, right? A little more insurance, a little more cost that comes out of the yield. These are the commissions for this. Remember, all the commissions are built into these rates. So the commission is, after the commission, this is the rate. So it's all built in. This is not something extra. There's no fees, no charges. This is just how it's going to run out. And so let's jump to the cleanest product here. I have another 5-year at 5.25. So it has a higher entry at 100,000, where those were 10,000, right? This is 100,000. There's no low band, but it does include the 10% free withdrawal, a full death benefit. This is by far the cleanest MYGA out there. So if you see one at 530, yeah, it might be a little bit better rate, but it's not as clean as this. It has a minimum guarantee after that 5th year of 1.8. So if you decide to stay for a month or 6 months, the least you can earn is at 1.8. A little less available. These are the states it's not available in. And again, $100,000 minimum for that one. A+ company, where these are A- company, all good. Those are a good A- company though, with a good history. So that's the 5-year. And this, they do have also some bonuses available, agents, like a production allowances. So you can click on the more details and scroll down on all of these. If you click the more detail button, you will have more details on that, and you can request an agent kit right there. So also we have the 5.35 for 7. This one, 100,000 minimum. California and Delaware rates are a bit lower. Under $100,000, the rates are a bit lower, about 15 points. You see the 3% commission built in there to age 75. Again, a true walk away at the end of the term. So if you have any questions on that one, give me a call. So that's the longer term. If people think they want to lock in those rates for a little bit longer, you can do it there. And really jumping to the next product line here, off the MYGA to the SPIAs, had a huge increase on the lifetime incomes. So here's some just sample quotes at $100,000 for a male age 60, life in 10, right? What does life in 10 mean? It's going to pay for as long as the client is alive, but no less than 10 years. God forbid they die in the 5th year, it'll pay 5 years to the beneficiary. If they live to be 100, it pays to age 100. So these are all based on an A+ company. You can see the comp there, guys. Again, all built-in agents. So the 60-year-old would get $605 a month. That's $7,200 a year. So, and it's guaranteed for 10 years. So yeah, take 10 times 72, 72,000. So if the client should die, even with the guarantee of 10 years, you have a risk of about $28,000 there. So that's why I also put the 15 years here. All these will return at least premium. God forbid there's an early death, and still pay for life. So that's the life in 15. And you can see the numbers there, and times 12, the annual. All these payments are monthly, starting 1 month after the $100,000 premium would be received from the company. These rates are good on qualified or non-qualified funds. So that's how it goes. Non-qualified, though, we do have the exclusion ratio that can be built in. Let's say you don't want to tie up your money for life, or you just want to take an income. We do have now the multi-year guarantees with interest-only withdrawals. So you can do these with higher rates, but a lot of the companies don't illustrate it. So I just illustrated, this is the 10-year at 5%. So you go long time. So as you can see here, it's a 5% rate, but we're going to take the money monthly, starting 1 month into it. So you're not compounding interest on that interest. So it doesn't come out to $50,000 on your million. This is based on $1 million. And these are really for people 59.5 and over, because there's an excise tax on this. It's not like the immediate annuities where there's substantially equal payments. This is an interest withdrawal. So 59.5 and over for these products. Otherwise, you're going to run into the excise tax from the government there, right? So, so as you see, 48,889 would be your withdrawal on $1 million. If it's 100,000, it'd be 4,800, right? So that is your, if you start right away, if you wanted to wait a year to take it, same thing. Now you can see where you earned that whole 50,000 because we didn't strip the interest. It earned interest. It compounded, and we took 0 withdrawals in that first year. And then if you decide to pull the trigger after that, even you'll get the 51,334. So that's still not, you're not earning interest on that interest that year. But yeah, there you go. So I just showed this so you could see that it is the same. So even though it says 48 here, you're earning the 5%. You're just taking it out. So it's not earning interest. So as you can see, the million would earn 50,000, $1,050,000 right there. So that's how it works. Again, withdrawals prior to age 59.5. You have to be very careful when you're doing systematic withdrawals. Anyway, that's the hot list for this month. If you have any questions, I'll have a link in the description. If you would like quotes, you can request a MYGA quote. Just head over to annuityexperts.com. Go ahead and highlight that MYGA rates and click on where it says deferred annuities illustrations right there. Fill in as much of this as you can so I can get you an accurate quote. And if you would like to have the withdrawals, just go ahead and click on the withdrawal provision area there, or simply just type it into the comments here and we will get you systematic withdrawals. There you go. And actually, this is an old sheet. So on the new request form, it will ask if you want withdrawals. So I got to update that page. The SPIA quotes, again, go to spiaquote.com. If you want the lifetime income quotes, go ahead and click on the get a quote right on top. It'll pull up this form and you fill it all out. So I know it's very important I have the date of birth. Very important you tell me what state, because some states have a premium tax. If you want a joint life, you can add the information there. And then, of course, fill in your email address so we know where to send the information. Anyway, that's the end. If you have any questions or comments, give me a call. You can set up a virtual meeting here on the last page of this PDF. That will be linked in the description. And be sure to follow us on YouTube, LinkedIn, and all that good stuff for the most up-to-date information. And yeah, that's the end of our hot list today. I hope you all get some good information out of that. If you have any questions, feel free to give me a call right here, 800-373-9697. And we hope you all having a good week. Take care. We'll be talking to you soon. Bye-bye.